What is going on, guys? It's Stas here. Welcome back to another video. As you guys read in the title of today's video, I just wanted to go over the top 3 stocks that I'm looking to trade in the third week of July in 2018. So for those of you guys that are new to my channel, my name is Stas and I make videos dealing with swing trading, day trading, long-term investing, and my philosophies and strategies when it comes down to investing and trading in the stock market. So for those of you guys that are interested in learning more about that, feel free to drop a like, leave a comment on this video, and subscribe to my channel, and let's get started with the topic. So the first stock I'm looking to trade is Netflix, ticker symbol NFLX. And for those of you guys that have been paying attention to the stock market over the past 2 to 3 years, you know that Netflix is one of the hottest stocks out there, right? If we look back over to the 3-year chart here, the 3-year weekly candlestick chart, we see that in the beginning of 2016, guys, Netflix was at a low of $80, and now we see it hit a high at about $423, and that's over 5 times the stock price back in the beginning of 2016. We see from $80 up to about $423. That's close to a 430% increase, in the stock's price. And that obviously trumps all the indexes and trumps most of the other stocks' gains over the past couple of years. So that really just certifies Netflix, as one of the hottest stocks in the stock market. And, with stocks like this, guys, typically when they're on insane bull runs like Netflix has been, and Netflix is talked about in the news all the time, every investor knows about Netflix. And me personally, guys, Netflix long-term, it is a little bit overvalued right now if we're talking about PE ratios and other metrics, right? But this is not a stock that I'm looking to buy in now and hold long term. This is a stock that I want to buy in and hold for a week or two and pretty much play the recovery of this recent dip. So we see over the past 8 months, pretty much since the beginning of 2018, we see the stock was at 185. This stock has doubled. So clearly, guys, it's on an insane bull run into 2018, right? And we notice that each time that this stock is pulling back, it pushes back up and creates a higher high. We see here it popped up to about 285, pulled back to 236, then it shot back up to 330. Then here it pulled down to 273. Then it popped up to 335, right? Then it pulled back. Then it kept shooting up to 365. Then it shot up to about 423. We saw another pullback here, shot up to about 423 again, and now we're pulling back. And what I'm trying to do here, guys, is get into the dip on Netflix and play the recovery, like I said before. And why I like Netflix is because it's down about 4.28% over the past couple days. Actually, just on Friday itself, it went down $17. And if we look over the past 5 days, we do see that Netflix has had a couple of red days in a row, 1 being here, 2 being here, right? And I do see Netflix possibly going back down to maybe the 380s in terms of, getting closer to that 180-day SMA line. But if we do draw out a support level here on Netflix, right, we do see it is at about $390. And if we look a little closer, maybe to the 90-day 2-hour chart, this could show it way better for you guys. So we see here it shot up to 423, like I said, pulled back down to about 381, shot up to about 410, and it pretty much just consolidated at around $390 for about a week, right? We see from about 625 up to about 7.3, right? About 8 days. It consolidated at this particular price point. It shot back up, right, to the same resistance point at 423, right? Topped off there, right? And now it's looking to pull back, and it's getting more close to that $390 support level. And if we also look down here to the RSI levels, the relative strength index, we do see that Netflix's stock is a little bit oversold right now, meaning that this could be a better opportunity to get into Netflix since the RSI levels are showing that it's 28 as opposed to the RSI levels being over 70, meaning that it would be overbought. So, this RSI, it's very useful in terms of understanding how many people are, buying or selling the stock. So if we're seeing that, it's getting closer to the 30 level here, we can understand from that a lot of people are selling the stock. But if we're getting over here, as the RSI level is pushing up, that means more people are buying the stock. So what we're going to be looking in particular with Netflix is that it finds its bottom, whether it be at 390, 380, wherever that ends up being, right? And I'm going to be using the 180-day 4-hour chart. I'm going to be using in particular this 180-day SMA line to determine where I'm going to be taking a position in Netflix, but I do see it pulling back, and the whole point of this trade is to play the bounce back, get into the dip, and recover back up to 420, 415 at least. So if we get in at about 390, let's say, up to about $415, that's a 5.8% trade. Up to about 420, that's a 7% trade. So I've mentioned in previous videos that my weekly goal is 5%. So that would knock it out in one trade. And that's why I'm looking to trade Netflix for this upcoming week. So the second one that I'm going to be looking to trade this upcoming week and that I'm already actively trading in my smaller account is GUSH, ticker symbol GUSH. And this is an inverse ETF. I trade in and out of this one and drip pretty much every single week, right? And I cover all these on my channel. So if you guys are interested in learning more about inverse ETFs, feel free to subscribe, right? And GUSH right now, it's obviously been on an uptrending pattern over time, as we can see, on this chart. And we can see there's been several channels that we've been able to trade over the past couple of months, and I can draw them out for you guys here really quickly. Obviously, this is the channel right here that I was trading a couple of months back, and then GUSH broke it, right? Continued to shoot up on this uptrending pattern, had a huge pullback here, started to trade a little bit horizontally, right? And now the channel that we're trading is this uptrending channel right here of GUSH creating higher highs and higher lows. And we're going to look at this channel a little bit closer right here. But before I talk about this one, guys, if you guys don't know what GUSH and DRIP trade based upon, GUSH is the bull ETF, right? And DRIP is the bear ETF. And these two ETFs, they trade based upon XOP. This is an oil and gas S&P ETF. Pretty much this is the same exact chart as GUSH, right? But if we look at DRIP, DRIP is it's the opposite of that chart. We see that DRIP's downtrending over time, right? And GUSH is obviously uptrending over time. And we see that XOP is the same exact chart as GUSH, right? So I hope that clears up things for you guys that are more beginners in terms of inverse ETF. So if we look a little bit closer to GUSH, the one that we're actively trading and looking to get into with my bigger account, we see that it's been creating higher highs over the past couple of weeks, right? The channel that we're trading in and the channel that we've been trading in shows that it's creating higher highs, right? The EMA line is acting as a support level, as well as the 50-day SMA line is as well. So we see here, it bounced at about $34. It shot up to about $39.25. The SMA line here acted as a support level. It bounced there perfectly, made another higher high. So right here, right off the bat, at this point in time, I knew that, okay, GUSH is creating higher highs now, and that's what we look in terms of an uptrending pattern, right? And we see that, okay, GUSH is creating higher highs. The SMA line is acting as a support level, which is a very good sign that it's going to continue to keep pushing up. And that's why my focus shifted over to GUSH in this particular time period, and I've been trading it ever since. And then we see the next time it bounced back down, right? It consolidated on that same exact 180-day SMA line. And right now, we see it bounced there again here. And right now, we see, okay, it's consolidating on this 50-day SMA line. And it's been at this price point for the past 2 trading days. We see here it consolidated there for most of the day, other than the initial drop there. For the rest of the day, it was able to consolidate at about $40.50, right? And the full day on Friday, it was trading between $40.50 and up to about $42. And we can illustrate this a little bit closer on the 5-day, 5-minute chart. And what I like about GUSH in particular right now, and I talked about this in my previous video, we see that it had 1, 2, 3 red days in a row. And what we notice here, guys, is that it's been trading under the EMA line for pretty much the past 3 trading days, right? But here it shot above the EMA line, and instead of the EMA line acting as a resistance level as it had been over the past 3 days, right? The EMA line here started to act as a support level. And we see that once it dipped below the EMA line here, the 50-day SMA line was acting as a support level, and pretty much GUSH was trading between the 50-day SMA line and the EMA line for pretty much the latter half of this day. And then the next day, it opened up green. Right, it opened up green again with that EMA line acting as a support level again, and here it traded above the EMA line as well, right? But then we saw a dip below the EMA line. But the thing I'm looking at closer here, guys, is that over the past 2 days, right, GUSH is looking to start pushing up. We see the low here at about $39 and the low here at about $40.50. So what that pretty much shows us that, okay, GUSH could be pushing up now. And, you know, it could be a good opportunity to buy, especially with it being over this 50-day SMA line right here where it has bounced 5 times in the past. So with GUSH right now, guys, I'm in at 41.10 with my smaller position, and I am eyeing up a position with my bigger account, right? Or with my smaller account, I'm in with $800 at 41.10, and I'm looking to get in with my bigger account, you know, after it confirms this push up. So we see from about $41 up to about $47, that offers 14% profit. And if it makes a higher high, you know, if it does continue on this pattern that it is of making higher highs, right, we could hit about 20%, but that's on the extremely high end here. I'm not looking to get 20%. You know, I would take my profits at about $45, right? But hey, if it does go up more, you know, and I'm in for the ride, it does have potential for 20%. So that's what we're doing with GUSH, and that's why it's the second ETF I'm trading this week. And the final ETF that I'm going to be trading is DGAS, ticker symbol DGAZ, and I've covered this one in pretty much every single video over the past week because I was talking about how I was scalping into DGAS, pretty much taking a smaller position, you know, every single day, usually just buying the dips, right? And why I'm trading DGAS in particular, guys, and I'm not going to be too repetitive in this video because I have been talking about DGAS a lot, right? But just to cover it for the new viewers out there, natural gas, which is the commodity that DGAS trades based upon, meaning that whenever natural gas is going down in price, DGAS is going up in price because DGAS is the bear ETF. You know, whenever this is going down, it's bearish, you know, and DGAS is going up. So why we're trading DGAS in particular is because we see that natural gas is on a downtrending pattern over the past couple of weeks. Ever since it was trading in this channel from $2.90 to $3, we can see that it was a horizontal channel, meaning it wasn't really uptrending anymore. It was pretty much just trading between $2.90 and $3. And once we see it broke below that $2.90 support level, this commodity continued to downtrend with the EMA line acting as a resistance level. And it was turned into a bearish commodity pretty much once it broke below the $2.90 support, right? And we see from there, guys, this EMA line, instead of acting as a support level, right, it was acting as a resistance level, meaning that the candlesticks would get close to the EMA line, but they would get rejected and make a lower low. So instead of instead of natural gas making higher highs like it has been over the past couple of months, you know, now it's making lower lows with the candlesticks pushing down and the EMA line, SMA line, pretty much acting as resistance levels. So if we look a little bit closer, guys, you know, to the 20-day 1-hour chart, this can be illustrated much simpler and much cleaner. So we see this was the channel from $2.90 about $2.89 to $3, right? With one little outlier here when it popped up to $3.05, and then we see bearish pattern right here, right? Very bearish pattern. When it got to that support level, it dropped heavily, right, back down to $2.85. So what this tells me as a trader, guys, is that the support level at $2.90 has been broken, right? It's at $2.85 now, and that channel could possibly be broken, right? It could be on a downtrending descent right now. And, you know, once we saw it hit $2.85, it consolidated for a little bit. It popped back up to $2.88, which was right around that same support level, but it got rejected by the SMA line instead of shooting back up like it did in the past. Once that rejection came, what that told me is that this one could be downtrending from here, and, you know, the next time it went up to the SMA line, got rejected again, and it's pretty much just been making lower lows, you know, ever since that point. And, you know, I've been trading DGAS for most of this descent here. I made about $200 profit 2 weeks ago on this trade, and then I got back in right around here as a swing trade. And what we see here now, guys, and why I held this one over the weekend, and we see that the commodities markets are open now, so we see a little pullback back on natural gas here, which was expected and which is what I was talking about in my previous video, right? Because we do see it took a huge drop to 275, so I was expecting a little pullback, maybe even to highs of 278, 279, maybe even 280, because, you know, the RSI levels are showing that natural gas is completely oversold right now. So a pullback is, you know, is likely, right, in my personal opinion. And that's where I might put more money into DGAS. So we do see it hit lows at 275. I do expect it to shoot back up to the SMA line, but then again get rejected. And that's where I'm looking to put more money into DGAS, and that's how I'm looking to profit more on this particular ETF for the rest of this week. And if we do look at DGAS, it is a little bit overbought right now. So a pullback, again, like I said, could happen this week, and I would be putting more money into this because it has broken this support level or this resistance level at 25.50, and this is one I was talking about in my previous video because this was an old support level at 25.50, right? We see it bounced here once, twice, then it got broken below here, and whenever an old support gets broken beneath of, right, like it did right here, it becomes a new resistance level. And what did we see this week, guys? DGAS broke above that 25.50 resistance level, so now it is again a support level because we see it's at 26.36 now, with the next resistance level being at about 27.50, which is my first sell target price for DGAS. So right now, guys, I'm in with at about $25.40 with plans on buying more in the dip, and that's pretty much what I'm doing. The three stocks are GUSH, DGAS, and NFLX, and that's what I'm planning on trading for this week. So I hope you guys enjoyed the video. Feel free to drop a like, leave a comment, and subscribe. If you guys want to follow me on Instagram, the link is down below in my description. @StriveSmart is my username. I post all my profits there, trades I'm taking throughout the day, updates to my channel, and random stuff on my story. So if you guys want to join my community, I would highly, highly appreciate and would love to have you guys on there. And make sure to do your own research when it comes down to investing and trading in the stock market. Do not buy or sell any stocks or ETFs based off of my opinion, because that is not how you're going to become self-sufficient over time, and that's the whole goal of this channel. So I hope you guys enjoyed the video, found some value in it. Let's make some money today. Peace!